Garvin Jabusch, one stock you like over at Green Alpha Advisors is Exact Sciences. It's down around 18% in the past month because they did a secondary, but expectations are real high for this cancer screening company.
Yeah, we do like Exact Sciences, and you're right, it's a little bit speculative in terms of the average Green Alpha holding, a little more so than usual. But you know, they have one product right now, it's called Cologuard. You're right, it's a rectal cancer screening, colorectal cancer screening product, and it's non-invasive, meaning you can take it at home. This is interesting because 90% of colorectal cancers could be cured if they were caught early, but most aren't. So as a result, it's the second deadliest cancer in America. So if we can catch it early, it can be a big deal. Recognizing this, it's now covered by Medicare. And interestingly, the Preventive Services Task Force this year is expected to rule on it. If they give it an A or a B, then every payer is going to cover it. That'll be a big day for Exact Sciences if that comes to pass. It's already being used at Mayo-Clinic. They're obviously leaders in cancer prevention. And finally, they're working on a non-invasive, just breathe into it lung cancer screening. So I do think that there's reason to be cautious, but the pullback could provide a good opportunity to get a really nice entry level should they get a favorable rating this year.
And you're also bullish on Google. They're having a great month. That stock really popped on their earnings. It seems as though cost control and a new CFO is really working for the company.
The new lady CFO appears to be doing a fantastic job reining in the costs. I think about Google in different ways, though. You know, I think they're a little bit like buying a venture capital fund. They're doing all these moonshots. You know, right now, they're the best ad serving machine in the world. 90% of their rev comes from ad serving, but it's not always going to be that way. Not because ads are going to slip so much, is one or two or more of these moonshots are going to take off and become huge for Google. It's like having a VC fund, but way safer in that it's backed by this massive ad serving engine. The list of the moonshots they're working on is incredible. You'd probably need Larry Page in here to tell you all of those.
All right, you're also bullish on Trina Solar. This stock's down over 25% in the past month. They're having problems with their Malaysian partner. Can they sort it out?
Yeah, I think they'll either sort it out or they'll just move on. They wanted to start in Malaysia so that they could beat the anti-dumping tariffs here in the U.S., so they wouldn't be manufacturing solely in China. Why this isn't going to be a long-term big deal for them is it's now turning out that most of their revs won't even be based in the U.S. They just opened a big, or they have plans to open a big new plant in India, which has huge solar potential. You know, this is a company that is trading at something like 0.65 sales. It's trading about 0.7 book, and yet it's profitable and growing both revs and EPS at double digits every year. So it's a fantastic undervalued story. Its PE is 8.
All right, well, staying in the solar arena, you also like Canadian Solar. This stock is also having troubles. It's down, I think, around 20% in the past month, too. Worries about anti-dumping tariffs in the U.S., that's what's dragging it down.
Yep, and same thing that was affecting Trina. And similarly, they're looking for non-China manufacturing plants or bases so that they can avoid those tariffs. Furthermore, taking the long view, I don't really think those tariffs will last indefinitely. Finally, Canadian Solar similarly is undervalued. An interesting thing with both stocks that I think is inappropriate in creating a market inefficiency is that they've both been trading downward in tandem with the oil price. Now, solar, of course, is technology-based energy, where oil is commodity-based. So the fundamentals are different, and it's not appropriate at all for them to trade in tandem. But a lot of traders just think energy is energy, so they trade together. But that will end at some point, and people will realize that there is a big difference. You know, technology gets cheaper and cheaper the more demand it comes under. Commodities get more and more expensive the more demand it comes under. So they're entirely fundamentally different. And I think you'll see the better solar companies with lower amounts of debt, better distribution channels, most geographically diversified, do very well over the long run.
All right, thanks a lot, Garvin.
Cool, thanks, Greg. A lot of fun.
And thank you for watching The Street.